So you want to buy a house and can't pay for it with cash. In this video, I'm going to break down what it takes to get pre-qualified for a loan. When people tell me they want to get into the market to buy real estate, one of the first things I'll ask is whether they're paying cash or financing. Right now, the real estate market is extremely competitive, so I want to make sure that my clients are putting their very best foot forward by getting pre-qualified for a loan. Think about it from a seller's perspective. If we go out, find a property that you fall in love with, we put in an offer without a pre-qualification letter, and somebody else puts in an offer with a pre-qualification letter from their bank, who's the seller going to go with? Exactly. So what's the pre-qualification letter anyways? In short, it's a way for a lender to figure out roughly how much you'll be able to get approved for on a loan. For pre-qualification, a lender is going to ask about things like how much money you make, how much debt you have, and they'll find out what your credit score is. If you're thinking about starting this process soon, definitely start to get your pay stubs rounded up, information on any outstanding debts that you have, and get it all organized. It'll then be a lot easier on your lender to get you a quick pre-qualification.
Taylor, I'm pre-qualified. That means I'm all set to close on the property.
I love the excitement, but not quite. After you've successfully identified and gone under contract on a specific property, that's when you're going to go deeper into the mortgage process and get your loan approved by underwriting. Just because you're pre-qualified, it doesn't guarantee that you'll be able to close on the property. To get a full approval, a lender is going to look at a few more things than they did for the qualification. Things like the title of the property. They'll work with the title company to look at and make sure there's no claims against the property. They'll look at the appraisal value to make sure that the home is worth the amount you'll be paying for it. And with some loan types like an FHA loan or a VA loan, they'll take a look at the condition of the home to make sure it passes their standards before they loan money on the property. They'll also dive deeper into your personal financial situation by verifying your employment status, proof of your assets, and your debt to income ratio. We talked about this in our video on how to buy a home for the first time, but I'm going to mention it again because it's very important. When you're going into the home buying process, do not go and finance anything. This will change your debt to income ratio and can mess up the entire loan process. So wait until you're through closing to go and put new furniture on a credit card or finance that new dream car of yours. Another thing not to do, and this might sound obvious, but don't change your employment status.
No, everything's fine. Hey, listen, I quit.
If you're clear to close on a home loan and you change your job 3 days before closing on the house, it's extremely likely that you can say goodbye to moving into that new house, and that doesn't sound like a good time. If you're ready to get pre-qualified for a home loan, the first step I don't want you to forget is subscribing to our YouTube channel and hitting the little bell notification so you can get alerted every week when we drop a new video. If you like this video, make sure to check out this one too. I'm Taylor with the Harris Group at Keller Williams in Bozeman, Montana. I'll see you on the next one.